Welcome to the Facts versus Feelings podcast. I'm your host, Ryan Detrick, and I'm joined by my co-host, Sonu Varghese. Cutting through the noise in 30 minutes each week with Ryan Detrick, Chief Market Strategist, and Sonu Varghese, VP Global Macro Strategist. Taking out the boring and helping investors focus on what really matters. A quick note before we start the show. Investment advisory services offered through CWM LLC, an SEC-registered investment advisor. Carson Partners, a division of CWM LLC, is a nationwide partnership of advisors. Well, everybody buckle up. Episode 155 of Facts versus Feelings is here. Sonu, we recorded this a couple weeks ago live from Excell, although it was live in a room with nobody there. So, is it live? Is it not? It was live. But we were so excited to be joined by Jan van Eck, the CEO of VanEck. Just an incredible conversation. You're going to love this. Sonu, without giving too much away and making this quick, if you remember what we talked about from a few weeks ago, how good was this one?
That was fantastic. And one word comes to mind, which is gold. Right. Mm-hmm. So this, I didn't know that Jan's father started the first gold fund in the United States in the late 60s. Yeah. So, between that, we talked about gold, but we talked about crypto and portfolio diversification, and all of that is such a good conversation. I need to go back and listen to it.
No, he's a pure titan, true titan of our industry. Just so many stories, just the way that VanEck has been on the cutting edge of so many different trends in our industry that honestly I wasn't aware of. So with all that, everyone, you're going to really, really enjoy this week's Facts versus Feelings, episode 155, talking gold, crypto, and more with Jan van Eck, coming up right now. Hello, welcome to the latest Facts versus Feelings with Ryan and Sonu. Sonu, this is a very special one. We're once again in Arizona at Excell, our 40th Excell. Carson Group has an amazing conference with over 1,000 people, all of our amazing partners all over the United States. And who is our special guest? We're recording this, again, by the time people listen to this,
it'll be like a couple weeks. This happened a month ago.
Yeah, so just remember that. But we're super pumped about our guest today.
Yeah, I've been very excited about this personally as well. I know Ryan and me together, we've talked about this a lot. Jan van Eck, and welcome.
Thank you.
Pleasure to have you here. We love titles, just as an introduction, maybe you can give your title as well.
My title?
Yes.
I'm CEO, but I also sit on our investment committee. Okay. But you can make up any title you want.
Yeah. And head of VanEck, ETFs, all of that. No, from a compliance place, though. But thank you for being here. This is really exciting to have you on.
No, it is. There's so many different ways to start this. Let's start just kind of, high level. You were in California earlier this week, right? Did you go out to the Future Proof, and now you're here? So how was that?
Very interesting. I mean, you know that the Ritholtz guys have kind of helped put that conference together. And I feel like for myself, it's really one of the leading independent conferences for RIAs. I would say, what are the topics? The topics were AI. I think the interesting thing I don't think is enough in the AI conversation related to longevity, meaning, we think of AI in the financial sphere, but if you think about some of the research they're doing with proteins, and maybe it's 10 years out, but protein therapeutics, what if our clients' lifespans get another 20 years or 30 years? That's probably not in our model. So that would be my
and what does that mean for the economy?
So Omani Carson, right, our founder and chairman of the board, he's talked before, I think on stage, and he mentioned, what if someone were to just go to the bathroom? And literally, if there's any cancer in your cells, that day, and that, again, this is down the road. I remember he mentioned that a while ago, where that's coming potentially, and just the changes that could make to the world, how long we all live, our health, just is truly fascinating.
I mean, to that point, like you said, therapeutics and the way medicines are designed and drug therapies are designed, it's always been iterative. You learn from, what's happened in the past and probably what's not worked in the past too. And as new things come on, but now with AI, I'm trying to think about that could happen, much faster.
Yeah. Right. We've identified way more proteins, the AI machines, than we knew, evidently. So it's not my area of expertise.
Yeah, so we definitely want to get into ETFs and all the stuff going on. One thing we just were talking before we came on, the idea of excitement, right? We're in a bull market. Markets are doing well globally. U.S. is doing well. I get to travel the country, present. I never get asked the question from most retail clients, hey, how high is this going to go? How good are things? It's always what's wrong, what's bad. One thing I want to ask you about, we are seeing a lot of big IPOs. The two ones, again, no recommendations, Circle, CoreWeave. There's a couple more coming out in September and October. And these stocks have done really well. Now, we remember the late 90s, even 2021, when SPACs and IPOs are doing really well. That's one thing that gets me. What's your take on market sentiment, maybe overlaying with those IPOs that are being very successful the last 5 months or so?
Wow, yeah. Well, we at VanEck do a lot of investing in the, we call it crypto, but you really have to break that down into a couple of different subtopics. That industry was really frozen out of the US financial markets, and a lot of private equity-backed mid-cap companies that are very significant have been now able to go public. And
there's a lot of pent-up demand, pent-up activity.
Very much. But over the next 12 months, I think what we're going to see in that industry is unbelievable change. First of all, you used to have, kind of crypto exchanges over here and securities exchanges over here. They're going to merge in the next 12 months. Like, the model to me is Robinhood. And so, yes, we have the IPOs, but then I think there's going to be, Ryan, a lot of consolidation. So they're kind of liberated, they're like out of jail. But then I think there's going to be, a lot of severe competition and restructuring that's going to happen. And then the second thing I have to mention relative to Circle is just the stablecoin legislation. I call it like the third most important piece of banking regulation in US history, because it allows tech companies to get into basically the payments industry, whereas it always ran through banks. And the banks are already pushing back. So what does that mean? It means that a lot of gross margins for operating companies are going to be affected over the next 12 months. I don't think anyone should really care about it too much, because it's really B2B activity and so what, but it's still going to reduce costs on aggregate, and that's good for business margins.
So one more for me, and we'll just go all over the place, maybe I'm jumping ahead here, but I always heard Ethereum was the internet, Bitcoin was AOL. I don't know if that's true or not. That's what I heard from a lot of smart people a long time ago. And you're kind of talking about some of the financing. I know Tom Lee, shout out to Tom, obviously he's been on our podcast. He's been big into Ethereum, talking about how it's changing things and going to open up for financials, just like you talked about. Why financial stocks maybe are even doing better now is because Ethereum's growing. Can you talk a little bit about Ethereum versus Bitcoin, big picture?
And even for from a 101 basis.
Yeah,
101, yeah.
Well, so again, Bitcoin we look at as digital gold. So we'll talk about gold later and put Bitcoin aside. My feeling about the rest of the software industry relating to this open blockchain world is that it's really impossible for the average person to follow. And so what we've done actually is said we have an actively managed ETF. Let someone who follows this all day long do that allocation. So when we launched our Ethereum ETF last summer, I basically said, what's ETH's market share? People are very... I bet Tom Lee doesn't know what ETH's market share is.
Good question.
Right? Because how would you even define market share? Right? And so I don't want to go down that.
Make something up, though. He's very good on the fly.
No, he's going to be bullish.
Exactly.
Yes. But so it just gets so competitive so fast. I would say that basically American companies, financial companies now have to make stablecoins available. Stablecoins are just digital dollars. So if you think of your bank app, you've got checking, savings, credit card, maybe you can send it in and out of your brokerage firm. You're going to have a fourth item there. It's going to be stablecoins. So they're going to be using software to get there. I think it's too boring to talk about how, but I do think if you want to play that innovation, go with someone who's following it on an active basis.
I want to pick on that stablecoin thing, because to your point, I do think what's happening with stablecoins is very underrated. I think it has the potential to change a lot of things, how we basically just go about our daily lives. Because a lot of us, there was a time when I used to hold a lot of cash in my, wallet. I don't use credit cards, right? But there's an intermediary fee and all of that associated, my bank accounts, things like that, ACH transfers. It's amazing how much of a pain that still is. ACH transfers, wire transfers, limits, and even Venmo and Zelle, that they've stepped in to sort of fill that breach. But I feel like, stable coins is sort of, like you said, it's basically a digital dollar, right? If instead of me giving you like $1 cash or, a dollar bill or a $20 bill, and give you a stable coin, and then there's a finality to that transaction, it's immediate as well, right?
Yeah.
So tell us how big you think this will be.
Well, I think it's very hard, number one, for Americans to understand, because our financial system has been basically stable or bailed out by the US government, right? So you've really never lost money from having your deposits in the bank since FDR.
Right.
So we don't even think or worry about that. The rest of the world, especially some countries, really worry about it. And so they're big users of stablecoins.
I mean, the same, like my family's in India. I know India is a whole other thing with crypto, but set that aside, if you have somebody overseas, it's a bit of a pain to send money abroad.
It's very much of a pain.
But stablecoins just completely changes the game.
It's already dramatically changing the game. Yeah, we're very involved in that. We actually hired the 2 people out of Circle to run a venture fund for us last year. So wow. They did about 100 deals at Circle. So we know very much what's going on, but it's again too detailed and boring in a way. But what I will say, what matters to Americans is that what I call Web 2 companies, so the big consumer-facing companies, like an Uber. Okay. Let's compare Uber and Starbucks. This is how your world may change. Right now, you have to move money into your Starbucks app, right? Yes. They have a Starbucks here in the hotel, and that's how you pay for things. So guess what's happening to, like I hadn't opened my Starbucks app in a while, there's $90 in there. Guess who's earning the interest on those $90? It's Starbucks shareholders.
It looks like you're buying coffee as soon as you're off the stage.
I should buy for the whole.
Or I use Apple Pay, for example, a thing, and then, I'm sure Apple's getting a cut or whatever that is, and then there's Visa and MasterCard taking the cut as well.
Yeah, but exactly. So if I go to Uber, however, right, they're all doing everything through credit cards, which means that someone is losing 3%.
Yes.
Right? There's no reason for that. Right? And now they have a green light, and Dara Khosrowshahi has talked about using it. Now, will it change your margins dramatically? No, but why not move money onto your Uber app and save some money for Uber and for yourself at the end of the day?
No, I think that's very interesting. Now, one thing related to that is, for the stable coin to be stable, basically, it's backed by treasuries. Right? So isn't it kind of ironic? I find it a little ironic that, stable coins will be backed by the full faith and credit of the US government.
Yeah.
So how do you think about that? I know the US has kept the system stable since, FDR and FDIC insurance and things like that. And then we have the bailouts. And I'm curious how you think, because crypto is supposed to be outside of the system. Mm-hmm. And now it's, I don't know if co-opting the system is a way to think about it.
I think it's just an unbelievably good piece of legislation, to be honest. In a way, it's revolutionary and deregulatory. Like I said, now tech companies like Apple can compete with the banks, but it does provide this sort of the only way to do it is to have treasury bills back it. Mm-hmm. And, in the crypto world, there's crazy bad behavior.
Sure.
At least from an investment perspective, meme coins, all this kind of stuff, and some crazy algorithmic stable coins. So to have it be as simple as possible, I think is also very, very liberating, because the last thing you want in a system is for people to rely on something and then it fails.
Right, of course.
Well, along those lines, the Melania coin, I think it's down, 98, 99%. Like a lot of people get into these exciting might be the wrong word, but these well-known coins, and then that happens, they lose faith. But what you're talking about, there are a lot of reasons, though, clearly have faith. Just don't go all in the next time there's a Melania coin, right?
No, don't do that at all, right?
Yeah. No, it's, you already mentioned Bitcoin being like digital gold.
Yeah.
Right? So I do want to touch on gold here. And congratulations on gold miners. I think you all had the first ETF.
Yes,
gold miners, 2006?
Yeah, we did.
2005, something like that?
2006, yeah.
2006, yeah. And this year it's up, 100%. Again, this is not a recommendation by any means, but you all can check out the VanEck gold miner ETF. I think it's up 102% as of the time we're speaking, early September. But yeah, congratulations on that. But why do you think gold is doing well?
So a little bit of background on VanEck, if I can, for people who haven't heard it. Just long story short, the firm is 70 years old, and my father probably made his name by starting the first gold fund in the United States in 1968, when gold was pegged against $35 an ounce. And so he basically said the inflationary forces are going to cause a break in that peg, which happened 4 years later in 71 under Nixon, and gold went from $35 to $800 an ounce. So you can imagine a great time to have gold in your portfolio, and I've started.
So was that like a mutual fund?
It was a mutual fund. Okay. And I've started calling it the first thematic fund in America because really funds back then were just US equities, very diversified. And anyway, so it was natural for VanEck to launch a gold share ETF and for us to get involved in Bitcoin because they're all part of the same tradition, if you will. So, our view of investing is look at these big long-term trends and figure out what do you want to have in your portfolio to benefit from it. So a thematic. So let's talk about gold to answer your question. Basically 2 years ago, especially, we started pounding the table and saying we think that both gold and Bitcoin are really attractive here and have long-term, sort of opportunities. And I'll tell you what I'm enthusiastic about for gold is not what you might expect, which is monetary policy, fiscal policy. It's actually the rise of India. And you're going to be like, Jan, that is totally weird.
We were just talking about that even before.
You're playing to the...
No, I'm not playing to my host here. I actually really don't like him, but...
my name kind of means gold as well. So.
Oh, it does?
Sona is a Hindi word for gold. And
oh, wow.
Sonu is a term of endearment that comes out of that, but yes.
No, but let me explain why. So India has done all these economic reforms, and on the trajectory that it's on, it's going to take basically shape to be the size of Europe in 10 years, let's call it. And you don't need demographics, you just need the economic growth. So if that's true, it'll be like the 4th largest consumer market in the world. And when I look, it's good. The US share of the global economy will shrink even further. And 3 of the big 4, right? Europe, China, India are not dollar-centric. They won't be dollar-centric. And so what we see is global demand for gold is very high. Partly it happened after we seized the Russian reserves, after they invaded Ukraine. But just in general, there's no other good currency in the world. No one's going to take the renminbi. It's not going to be the yen. It's not going to be
and nobody wants a rupee either.
Right. No. But they don't want dollars, is my point. Right. So what's the common second choice? It's gold. And so actually foreign central bank reserve holdings of gold are now higher than US treasuries.
That's amazing.
So, but I see this as a 10-year trend. I really see a lot of potential.
Let me dive in there. So these are approximates. The gold market, they say, is about $22 trillion. Bitcoin's approximately $2 trillion, maybe $2.5 trillion. Does Bitcoin catch up to gold? Do they get even 1-to-1? What'll that look like if both are still in bull markets, let's say for 5 years, which I think maybe you agree there? Does Bitcoin catch up, or how's that look?
Well, no one knows. But Ryan, since I did my kind of original deep dive in 2017 when Bitcoin was about 3,000.
Right.
So we've been following this for a long time and writing about it in our research. I basically have just used the rule of thumb. There'll be half the market cap of gold.
Got it.
So that number keeps going up. It's 400,000, that's 500,000. But I think it'll start becoming boring too. Like it's not surprising the volatility has come down, but I do think there's still a lot of people that don't invest in Bitcoin globally. So
we see the surveys, and I know you do too. One more from me. The idea of private equity being allowed to go in 401ks, potentially Bitcoin being a lot easier to go in 401ks. What's your thoughts on some of those changes or potential changes we're going to see here sooner and later?
Yeah, there's a ton of interest in this area in the wealth space. We actually launched an ETF that invests in the fund companies that offer private credit and private equity, the general partners like KKR and Apollo and Ares and things like that. And it's amazing. We launched it earlier this year. It's amazing how much people want to talk about it.
Yeah,
like every advisor instantly gets it because they're getting all these emails from all these private companies.
Better being a general partner than a limited partner. Talk about that.
Yeah, so philosophically, we actually ran $4 billion in hedge funds before we started our ETF business. Okay. And I'm a believer that a lot of those higher return opportunities have limited capacity, meaning the funds should not be too big. Now, there might be some exceptions to that, like for private credit where you have economies of scale, but that's my sort of inclination. So we have 2 totally different businesses at VanEck, right? We've got ETFs, which are an economies of scale business. We're always, not always, but every year we cut the fees on some of our ETFs. That's just the way luckily they're growing and we can afford it, but that's just part of that dynamic. So I think you have to be willing, at least we always are willing to cap the size of the private funds that we sponsor. Okay. So I just think you have to be thoughtful of what you're adding to something like a 401k and if you're doing it at scale. Now, again, I think some of the alternative credit shops that can write $1 billion check for a data center, I get it. They have a competitive advantage, and maybe that makes sense. And what I just said is an exception to that. So the one question, Ryan, I'd ask you is, we're sitting here in 20 years, looking younger because of some therapeutics, right? being smarter because of some of the therapeutics. And some of the people roll out of these target date funds after they have a 10% allocation. Mm-hmm. Who's providing liquidity for those private equity holdings? Right? They have to, people are retiring. The target date, they're like, okay, now I want to actually spend the money on my retirement. Right. Like, interesting. So that's how there's no problem putting the money in. It's getting the money out. Okay. And I think it's going to be delayed a long time, but that's just one thing I'd point out.
I like it.
Yeah, I think matching liquidity to your duration.
Yeah.
Right? I mean, you want to make sure they always match. And that's something we always talk to our advisors about. And I think our advisors generally do a pretty nice job about asset allocation, right? You have, like our advisors use buckets, right? There's bucket 1 for immediate short-term needs, bucket 2 for maybe 3 to 7 to 10 years, and then your long-term bucket. But but that's assuming you have the advisor, right? A lot of people by default, to your point, is like, I'll just put it in the target date fund, right? And now the target date fund has something that's really liquid. And you could probably get out of it. The question is at what price?
Well, those managers just have to be conscious of that, right? And BlackRock had an issue with their BREIT fund a couple of years ago, if you remember that. Oh, yeah. And, they suddenly got $2 billion out of a pension fund to provide that liquidity. But these
I think
interval
it was California
funds, these interval funds can get into a downward spiral where if people feel they can't get out, it's sort of like an ATM that stops working. Then everyone's going to the ATM going, I want my money. And that's a bad cycle for some of these interval funds.
So we've hit about the halfway point of Facts versus Feelings. Ryan and Sonu, joined by Jan van Eck at Excell out in Arizona. I do want to talk about your dad a little bit. Let's kind of go there. Obviously started the company 70 years ago. What are some things that you learned from him, leading a business, being in the financial industry, I assume your whole life because you grew up in it. Yeah. Just talk about your dad. What are some cool things about him? Maybe you've never even said before, some things that we could take away from all the amazing things he did.
Just to describe who he was. So his father was Dutch. That's why my name is So Dutch. And he actually, my grandfather started Shell Oil's operations in the United States.
You didn't invest in tulips, did he? That was a couple generations before. I get it, but yeah.
No. So my grandfather started Shell Oil in the United States. Wow. But what was he really? He was a salesperson. He was just trying to sell their oil. So it wasn't anything super glamorous. And their business there actually was based out of California. So my dad was born in San Francisco in 1915. My grandfather rose through the ranks.
When was wasn't there a earthquake in 1907?
07, which led to a financial
And then the financial crisis after that, then all was San Francisco, right? I mean, it was all out there.
Then we got the Fed.
Yeah.
Well, then the Fed came and saved the day. Okay.
Exactly.
1913 was when we got the Fed. Right?
Exactly. Oh, we can do some history. Okay. Yeah. So, but just sticking with that that narrative. So, I guess he got a MBA at Harvard Business School. Went into the energy industry and really didn't like it. He said, I think Americans should invest in Europe and Japan as they recover after World War II. So he actually, in 1955, there were only 2 companies that had an international equity fund. One was Franklin Templeton, John Templeton, and the other was Jan van Eck. So anyway, but he was very much a historian, I would say less of a salesperson. And so, Templeton's assets were on a different trajectory than Van Eck's assets. But then, like I said, it's actually really interesting, late in his 40s, with 2 jobs, because the AUM of the company wasn't big enough, he had to write research on the side, 2 little kids at home. What does one say? Oh, I've got so much free time, I'm going to get a PhD at night. So he went to NYU and started studying, and he studied under an Austrian economist called Ludwig von Mises, who basically said inflation's going to be a problem, you should get into gold. And that's what he did. He sold 85% of that international equity fund and put it in gold.
And ballpark, what year was this?
1968.
Oh, it was 68 when the fund started. Understood. Okay.
And so some context here.
So it was a conversion. I mean,
it was really a conversion.
International equity fund that became a gold fund.
Yeah.
Fascinating.
And why was it gold mining shares and not gold bullion?
Oh, it was gold mining shares. Okay.
Yeah.
Okay.
And not gold bullion?
Oh, because you couldn't, because of the restrictions.
It was illegal.
It was illegal
to invest in gold. You could invest in gold coins, which was during the 1970s bull market. People would invest in the VanEck International Investors Gold Fund, futures contracts. So a lot of brokers had Series 3s, and there was no ETFs back then, and coins, Krugerrands, and Maple Leafs. Yes. That was what happened in the 70s. Anyway, so that's basically the history. So I think that historical perspective, especially now, VanEck still has this macro perspective where we look at what are things on a 10-year basis, like the rise of India, or the rise of AI, that are going to affect financial
So do you get back to Holland much? Do you go? Is there any reason?
Family still there?
My mom's actually German, so and we have business in Europe. So yeah, I've traveled a lot globally.
I went to Xavier University one day. This roommate just showed up, and he was from Holland.
All right.
My buddy Rob. So I spent the summer in 2000 there, and I'll never forget. It was, I guess, the Euro Cup probably, but how everybody wears orange. I mean, like when you say, how many people live in Holland? 10 million, maybe 12, something like that. It's about the size of Ohio, where I'm from, but every one of them had orange on. I thought it was really cool the way they love their football team and really get into it. So that's
I'm a big fan of soccer, and my favorite team is the Dutch soccer team. So and
really,
I mean, I've been a citizen of the U.S. for 10 years.
Playing it up.
So yeah, no, it's ever since I started watching soccer back in the mid 80s. So
yeah, that's fascinating.
That was a time when they were doing really well too.
Yeah.
So, but actually, let's stick to that macro thing, that macro theme. What do you think is the biggest underrated macro story right now? I mean, we've talked about AI. I don't think that's underrated. If anything, maybe it's played up a little too much. Yeah. I'm not saying it's not, it's going away or anything like that.
Yeah.
But set that aside, like the biggest underrated macro story.
So we talk about, the rise of India.
Yeah.
I mean, I think that's really going to change the world. And if you look at India's weight in equity portfolios, it's like 1%.
Yeah.
And if you look at the India stock market's returns, it's actually pretty comparable to the S&P. And when you travel different countries around the world, one of the most important things that I think about now, it didn't used to, is do they have an equity culture? Is it okay being successful? Is it okay taking your company public? In a lot of countries, you really want to hide your wealth. But that's not true in India. And I think there's a couple of things that changed. To me, Infosys was a big thing. So that was a big tech company where a lot of people own stock options, and it really created a lot of millionaires in India. And people are like, oh, I can go be part of a company that goes public, and this is actually a very good thing. And there are about 200 to 400 IPOs in India every year. It's a very pro-business, I would say, culture and government.
It's interesting comparing India to China. I mean, I've looked at, maybe you can put a chart up and, I'll compare S&P 500 returns to the India index, the Sensex, which is the India.
So David will put that chart up right now. How's that? There we go.
To the Shanghai index too. If you go back to like 94, 95, so the last 30 years, right? The S&P has obviously done really well. I think India is way above that, especially in local currency terms. That's what we're talking about, right? Okay. It's way above that. But even if you hedge for currency, I mean, account for the fact that the currency's gone, depreciated against the dollar, it's still really good returns. China's flat.
Right.
Really flat. Chinese stock market has done nothing for about 30 years. It's barely 1% return annualized or something like that, right? So I think it gets to the fact that in India, there is that attempt at capitalism. I'm not saying it works as well as it does here, but there is that attempt at capitalism, the desire to do business and make money. In China, yes, you have, China's infrastructure is probably 10 times better than what it is in India. India's infrastructure is not great at all, right? You see fancy buildings in China, bridges, all of that, but there's no return on equity.
Right.
There's no return on investment.
Right.
Right? Whereas in India, I feel like that's very different, and it makes it similar in some ways to what we see in the US.
I mean, it's a very competitive market, and people's like, Jan, you don't know anything about India, it's so poor, infrastructure, there's 5,000 problems.
Sure.
It's very poor country, right? And also what I would like to point out is AI, like markets are so efficient. Like AI is already affecting companies in India. It's not like there's some 10-year time delay.
Yeah.
So a colleague of mine likes to point out, like India paints. Like if you thought of India, of course, everyone is building more. They need to.
It's like the Sherwin-Williams of.
Yeah, they need to paint more stuff, but they have thousands of retail stores, and now with the digitization of cell phones and everything, distribution is becoming changed dramatically, and that's a liability for them. And they're actually, their stock is down significantly. So it used to be a traditional emerging markets holding. If you imagine sort of what you would think would be a good growth story in India. It's not that at all. Instead, they have like an online insurance company, like one that we like, and it's their economy is getting digitized. So it's just, you know, everything is happening super fast in our world.
Yeah, I think over there, like every time I travel to India, which has been about once a year or so, I'm amazed by how the digital technology, the payment technology, is so far ahead of the US.
Yeah.
I feel like we're so far back with respect to what we have with respect to digital payments. There, it's like, it's so easy. Everybody has a smartphone.
It's free.
For one thing. And it's free, yes, it's free. There's no intermediary there. So, like, they don't have the stablecoin thing yet, but I feel like that's what stablecoins will get us to in the US.
Yeah, well, they don't need it, and countries that are worried about the strength of their own currency, like India, they don't want US dollar being instantly available.
So this came out, by the time people listen to this, maybe 2 months before, but we knew this was coming. Morningstar came out, and I'm sure you're on it too, said there's 4,300 ETFs, 4,200 US stocks. Now, we all saw this coming, kind of like a slow motion train, but then it happened, and it's like, oh, wow, there are more ETFs than there are US-based stocks. Obviously, I don't think you probably have a problem with that, or do you? I mean, what is your take on so many ETFs? Is there too many ETFs coming out there? Being someone who's been in the industry most of your career.
Yeah, I mean, I think it's a little bit of a misleading number because there are a lot of small ETFs and there are a lot of ETFs that will be closed.
All right.
So like, I know we have about 70 ETFs and I think there's like 14 or 15 that have over $1 billion, just to put it in perspective. Sure. So that's kind of comment number one. Okay. Comment number two, however, is one of the themes that we've been talking about this year is sort of the AI 2.0, what are the beneficiaries? And our most popular ETF is actually our nuclear energy ETF. Wow. So now it's sort of like, I think it's like ballpark $2 billion, I should know better, but so let's call it $2 billion. In 2020, Ryan, 5 years ago, its assets were less than 20 million.
Wow.
So it started the second year we had ETFs. It's been around forever. We thought one day its time will come, and sure enough. So that's the argument to have smaller ETFs. Now, I liked it earlier when we were in the industry, and you could find white space like the first intermediate muni ETF, that kind of stuff. We're way beyond that. I don't like product proliferation to me, but like that's all our jobs is to, kind of sift through that and clean it.
There's a paradox of choice,
A lot of them are crazy. So, the last point, to squeeze this in, the last thing I thought sitting here in 2025 is that we would have more good ETF ideas. I mean, honestly, 10 years ago, I thought, oh my God, what are we going to do? We're going to run out of ideas. I like some of these ideas that we've coming out. We talked about the access to alternative asset managers, GPZ. You couldn't have done that ETF 10 years ago because there weren't enough publicly listed managers. So, there are some good new ideas.
One more for me that's going to jump in. I looked at your 70 ETFs, and one that struck me, I thought was, I didn't quite realize it was there, the ESPO VanEck Gaming and Esports ETF. It's been extremely hot. Strong. I'm assuming there's been some flows. I'm not sure. But how do you come up with, okay, this is 70. What's going to be number 71?
Yeah.
That's a pretty specific one. That's kind of cool.
Yeah, thanks. I think we look at all the trends that are out there, the investment trends, and try to just ask, is it a fad? Or is it something that we think it'll be around for a while? Like one of the surprise winners for us was our agriculture ETF, and we used the ticker symbol MOO.
I probably need to say this one more time. These are no recommendations by any stretch from the Carson side of things, because we're getting way down.
Or the VanEck side of things.
From anybody. We're just talking. No recommendations. Go ahead. Yeah.
No, but like out of our investment group, people said, look, China is urbanizing. They're going to be demanding more protein. And so you should put together a basket of agriculture stocks,
okay.
you know? And sure enough, like that thing exploded in size. You know, that was a theme for a while. Like it's not something I'm wild about now. So it's just, you know, kind of looking at how the world is changing and what people might want to have exposure to.
Like it.
Sometimes we look at, I don't want to get too in the weeds, Ryan, but we have ETFs where we think there's a twist on the asset class. So for high yield, people have talked about this concept of fallen angels forever. We launched we were the first to launch a fallen angel ETF.
I remember that. Okay, yeah, I remember that.
You know, so like, it's like, there's just stuff out there, you know, like, now that won't work great every year, but, you know, over long term it does.
Got it.
I just dropped my mic. Hopefully, yeah, I guess it's still working. So that's good. Yeah. But,
still there.
So I want to pick up on the nuclear thing and talk energy. For me, like I asked you, like, what do you think is the most underrated story in macro? I think a big part of what I know that people talking about it, but I feel like energy and where we get energy from and where we will get energy from, say 10 years from now, 15 years from now, is not talked about enough. And I'm curious on nuclear itself, why that's not picked up more, because nuclear seems, I don't want to say it's easy, it's not easy doing nuclear, but I'm in Illinois, so Illinois is slightly different. We get just about 50% of energy from nuclear, unlike a lot of other states. I'm curious, why hasn't nuclear been talked about more, even discussed as a big part of, you know, the fact that we need more energy, whether it's for AI and all sorts of things?
I think the change in policy happened very quietly in the fall of 2024. It was basically under Biden's kind of Green New Deal kind of project, and one of the solutions was Biden provided money for nuclear, the extension of plants. And what you saw Democratic governors in California, you know,
even in Illinois too. I mean, I think it was 3 years ago, they passed it was on this at the state level, passed a big energy bill promoting nuclear
Illinois,
too.
But Michigan and Delaware, also Democratic governors. So suddenly you had bipartisan support for nuclear, but it happened quietly, right? And then, you know, there was some discussion of that. I think the second insight was that the hyperscalers absolutely were going to the White House going, we need much more electricity. And I think they were like, well, what do we have? What do we have? Well, we have natural gas in the short term, but we're going to need nuclear. So I think that's kind of where suddenly the consensus emerged, maybe quietly in 2024. Coming into this year, the bear case was, it takes 5 years to get a nuclear power plant going, and no one wants one in their backyard. And what's happened, though, is that Trump has just put his foot on the gas when it comes to nuclear. Maybe it's not widely appreciated, I don't know, but what he has done is put really direction and the federal government's resources for trying to get around that problem. So people don't want it in their backyard. Okay, I've got a lot of federal government land.
We've got a lot of space. I was just out in the West driving around. We've got a lot of space. I mean, there are countries where there isn't a lot of space.
Yeah, we do.
We have a lot of space.
Did you drive here?
No. I was on vacation 3 weeks ago, driving across, you know, Colorado, Utah. Yeah. There's a lot of space there. I'm not saying, and no offense to anyone in Utah who doesn't want a nuclear reactor in their backyard, but there is a lot of room in this country.
But anyway, that NIMBY was a big concern. So the time lag to build, Ryan, and then this NIMBY concern.
And NIMBY being not in my backyard.
Not in my backyard was the reason that people were more bearish on the sector. I just felt that Trump was going to be more bullish, number one, excuse me, and number two, it's a global industry. So almost every country, except for Australia and Germany, have changed their minds, you know, following this fall.
And France has historically had a lot of nuclear energy.
France was super smart,
Right.
And they were like, during the oil crisis, they said, we don't want to relive this, you know, nightmare. So we'll put, you know, there's 70% nuclear power.
Oh, I didn't know that. Okay.
But all the power plants are on their border, which is really funny.
You know, I think it was maybe in January, February, you had a sales meeting with your team at VanEck in, I believe, New York City. And a couple of people texted me. I guess you mentioned Facts versus Feelings is one of the podcasts you really like to listen to. So thank you for that. What are some other podcasts you listen to? What other, for the listeners, you know, there's probably a lot of these, you know, correlate, but where do you get information? And where's public places a lot of people can get that?
I think...
Besides this podcast, of course.
Yeah, of course. I think, you know, I love alternative media, so I love podcasts. to me, technology is changing so quickly. I like the all-in pod. As a weekly must listen, I say. I think obviously their political involvement is another angle. I like their technology. I listen for the technology. I like the Compound and Friends because they've got great people from Wall Street that I thought I would know them all, and you just don't. And so they're really good. And I read Barron's every weekend. So those are kind of my must listens. I also share. I know you guys are active on social. Podcasts that I like. I listened to one on Invest with the Best that talked about the use of AI in education. So there, which I'll post. It's some things are really awesome.
Yeah, it is a neat world where. I started the industry 25 years ago. Everything felt like it was behind a closed door. Now it's like if there's a special report, all of a sudden there's a podcaster talking about it. And it's like, it's really broken down the barriers for, I think, information. It's neat because just this morning, I had 2 different people reach out on LinkedIn, young kids, want to just kind of get together and talk a little bit. And I mean, it's neat how social media has really helped my career. Facts versus Feelings, Sonu and myself and the Carson brand. And we're just honored that you got to spend, we've got about 5 minutes or so, we're just honored. I do want to show you something here. We'll just record this live.
There you go.
This is not from Starbucks. Even though we got you a little something here.
We'll get it.
Oh, right, a T-shirt. Yeah. Oh, I was rooting to get a T-shirt.
Right, nice. And that's a white one. Those are limited edition.
There's limited edition.
Yeah. So there you go. So you can wear that. No, all right. Thank you.
That's awesome. Thank you.
Oh, you're welcome. You're welcome. It was honestly a big honor for us. So we got about 5 minutes, Sonu. Let's make a couple of good ones here.
Let's go back to the AI thing. I know we started talking about AI, and I was hoping we don't, this way we don't spend the whole 45, 50 minutes just talking about AI, but we'll bring it back to that. Something you mentioned is, I think, important, like AI is dependent so much on data.
Yeah.
You need data. And there is also, the chatter is, I think a big part of the chatter is where is China in relation to the US with respect to AI capability, things like that. Now, just trying to combine both those ideas, we obviously have a lot of data to train our AI models, things like that. China also has a lot of data, but we don't have Chinese data. Mm-hmm. Whereas China has everyone's data plus their data. Just from that fact, do you think they get ahead? Because they have more data. They have like 1.5 billion people's worth of data more than, because the Chinese don't let us have access to the data. In fact, I think Elon's complained about that too, right? I mean, with respect to Tesla and self-driving and things like that.
Yeah, he had to do a deal to
get
that. Yeah,
so I'm curious what you think of that. I don't know what to make of that. I'm trying to think through it myself. Implications of that?
That's a great question on the data angle. I don't really have an insight there. The point I make about AI, though, is it's a global industry. Mm-hmm. So, Alibaba, right, sort of made some news a couple of weeks ago, basically because they are working on their own chip, as every hyperscaler is working on their own chips and their own software and everything, because it's so mission critical for them. And I like to point out, the second largest shareholder of Alibaba I live in New York State, he lives in New York State, Joe Tsai, right? And he is completely plugged in with the global, what's happening with global technology. Mm-hmm. So it's not like they're over there, we're over here, and all this kind of stuff. I think, what equities you invest in, I think that you have less risk investing in US equities from government regulation than you do, and in India than you do in China. Yeah. So that's the kind of one thing I focus on. But I don't know if you want to talk about the Intel investment. But,
we can go there. We can go there. I was going to ask, is Intel a state-owned enterprise? We literally talk about China.
Yeah,
we always know the government does a great job with these things.
I know.
Well, if you were in 1600 Pennsylvania Avenue, right, and you were thinking, what are the worst things that could happen? What is the worst headline you could get, and how can I de-risk? Obviously, Taiwan's
China invading Taiwan.
And the chip supply being so important. So I think from a national security perspective, that's what drove the Intel investment. Actually, one of my analysts kind of had predicted this several months ahead of time because of that. I would point out as well that a lot of the money that went into Intel had already been allocated from the CHIPS Act. Sure. So it wasn't like fresh money. Mm-hmm. And then the last thing is, we were talking about history before, during the financial crisis, there were a couple of critiques you could make of the bailout. but probably the most profound is that we lent money to all the banks that were about to go bankrupt, but we never took any of the upside.
We didn't take
right? We got our money back, but we didn't ask for like 5% warrants or something like that. And so I think it is, if we're going to give a company money to do something in the US, which is for national security reasons, to own some upside is not a crazy ask. So anyway, that's the perspective in which I would put that investment. I'm not in favor generally, and they haven't asked for any control rights. The government hasn't, so not generally in favor of it, but I think it's an interesting perspective.
So last question then, just let you go for as long as you want with this. You've been in the industry a long time. We just talked about a lot of cool things. We like to kind of have a positive vibe on the world. What are you excited about? Let's say the next 10 to 20 years about this industry, life, investing. What excites you so much?
I mean, look, we're so lucky to be here, right? We live in a country with a lot of personal freedoms, a lot of wealth, a lot of access to healthcare. Obviously, everything can get better. So I'm really just more grateful for today, being alive, and all the good things that we have, in our country. So looking forward, more of the same. I'm grateful for every day, Ryan, to be honest. That's how I look at it. But I do think a lot of the technologies hopefully will help with healthcare. I only had one sibling. I lost him 15 years ago. And there's so many, inefficiencies in our healthcare system, and hopefully breakthroughs. And that's the single thing I look forward to the most. It's really sad what happens to a lot of people, a lot of good people, right? And hopefully there'll be more cures.
Absolutely. Yeah. Well, thank you. Yeah, it's a pleasure having you here.
It's great being great meeting with you guys in person and being here.
This was amazing. We really appreciate it. I know the listeners are going to absolutely love this one. So with all that, everyone, we're going to sign off for the latest episode of Carson's Facts versus Feelings. Ryan and Sonu out in, where are we? Phoenix?
Phoenix.
I said Philadelphia.
Yeah. Hot Phoenix.
Phoenix. It's 101 degrees today with Jan van Eck. Thank you so much.
All right, thanks.
See everybody next week. Thank you.
Information provided on Facts versus Feelings with Sonu Varghese and Ryan Detrick are for general information only and are not intended to provide specific advice or recommendations for any individual. The statements and opinions of show guests may not be reflective of CWM LLC or its affiliates. Past performance is no guarantee of future results. All indices are unmanaged and may not be invested in directly. Investing involves risk, including possible loss of principal. No strategy assures success or protects against loss. To determine what may be appropriate for you, consult with your attorney, accountant, financial or tax advisor prior to investing. Guests on Facts versus Feelings are not affiliated with CWM LLC.